Hello, and thank you guys for joining us on this edition of A Cup of Joe with the Adonis Agency. Today, I wanted to talk to you guys about deductibles. How do deductibles work? And the primary purpose of the deductible is to help limit the amount of frivolous small claims that the insurance company sees. What I mean by that, so they put in a deductible, so that is the portion of the claim that you're going to be responsible for. So if something happens and it's only $200-300 in damages, and you have a $500, $1,000 deductible, chances are you're not going to put in a claim because you're responsible for that portion anyway. So it's to help limit the amount of claims that are coming into the insurance companies. And how I talk to my clients about the deductible is I have an open, upfront conversation with them where I tell them, you know your driving record better than anyone else, right? You know your habits better than anyone else. Even though clients will tell you my driving record is excellent, but then you pull up the MVR and you see like they have 10 items on there. You have to let them know, hey, listen, with all these accidents, with all these claims, with all these tickets, the question is not so much if you ever get into an accident, but when you get into an accident. And when you do get into an accident, do you have the funds to cover the deductible? And if the answer is yes, and you have excess savings and you have funds for a rainy day, then I advise them, get a higher deductible. Because at the end of the day, you're able to self-insure up to that point. So you're able to cover it to make you back whole. And the truth of the matter is the higher the deductible, the lower your annual, your semi-annual, your monthly premiums are. The lower the deductible, the higher your monthly premiums are. But if you don't have the funds and you do get into a lot of fender benders, get the lower deductible because yes, you're paying more for it up front, but it's worth it. It's worth it because you don't necessarily have other means if, God forbid, the worst happens. Now, in New York State, a lot of leasing companies, a lot of finance companies don't want you to have a deductible more than $500, right? That's not a law, but that's just their preference, right? They don't want you to have a deductible more than $500, and that's to protect them. That's to protect where if the car does get stolen, if the car does get totaled, that the insurance company and you are able to pay the claim. But again, you know your finances better than any insurance agent, better than any bank. You just have to be honest with yourself. Do you have the funds to cover it? And if you do, get the deductible that you're comfortable with, right? At the end of the day, right, you have to balance, it's a balancing act. You have to balance pros versus cons and your immediate needs versus your future needs. But if you ever have any questions, please feel free to give my agency a call, 631-390-8568. We're here to help. Have a great day, guys.